Good afternoon. This is Howie, and I'm here to help you win with money. That brings us to the end of the trading week of the election week. And for most of us, it was a great surprise. Most of our portfolios are up because the stock market had one of the best weeks. Most of us gained anywhere from 6 to about 8 or 9% on the change of the underlying. So the stock market has been a great week. So in this episode, I'm going to show what happened. Normally at the week, I record my transactions, which is over here, and I paste it into my spreadsheet over here, and I paste it directly from ETrade into here, and you can see normally there are some things that I have to do differently. I plug these things in, and I already did it for this month, and I have a pivot table all the way over here, and I already updated the pivot. Oh, actually, I did not update the pivot. There you go. And then you'll see what happens. So you can see I'm having a kind of a rough month so far. I did close out a lot of my credit spreads or my iron condors. I wanted to reduce some risk. I had a iron condor on Square, and actually that did not go the direction I want. It did pop up 20 some odd dollars on Friday, but it's been moving against me all week. So I took a loss there. I took a loss on a few other things, closed some things out. This one is mostly Xilinx. You can sort of see that. I don't trade on Saturdays, but this was exercise or was put to me, and I'll explain that a little bit later. Here is my monthly. You see it. This is real data. It's a real pivot. If you double click on it, it will show you what I did. That's the iron butterfly that I end up doing. But it's so far not a good month. Look at the numbers. The only good thing about having multiple strategies, it will show you what's working and what's not. My cover calls are on track. Remember, we're 7 days into the month. Cover calls will probably end up $2,000 to $3,000. There is earnings still next week, and one of the things I need to do is just be a little bit more cautious for other stuff that already posted earnings. I should be able to make some money on just writing iron condors on things that shouldn't move. Now there is still market risk, so there's always things that you have to consider, but this is the update of my portfolio. Again, nothing to hide. I show winners and losers. You can see the numbers here. This is not good. So now let's go back to explaining what happened over here. So let me explain what I started with. Several weeks ago, I started with an iron condor. So let me try to explain what that is. I sell iron condors. So I will sell you see this? The letters will help you out. I will sell a short call, and then I will buy to open a long call. And this is a credit spread or a call credit spread, right? And then on the put side, it's the same concept. You will then sell to open a short put, and then you do a long call here. I'm sorry, a long put, and then this is your put credit spread. Normally, I sell it for 45 days out, and I wait. So what happened recently? It first started with rumors that AMD wants to buy out Xilinx. And here you go. This is on October 29th. They talk about an all-stock deal. You see here, it talks about, well, how much will that be? And they estimated that that will make it $143. If you check Yahoo, look what happened next. So you see here, Xilinx was trading at 105. And then it popped over 118 and 120. So I was already in trouble here. And look what happened. It sort of settled down. Then it went towards, and then up. And then once it was confirmed, it re-popped back up. And now it's moving closer to the buyout price. So let me explain what I end up doing. So my iron condor, the share price went from here, let's say, in the middle, and it went all the way down here. If I did nothing, I still experienced the max loss. You understand that? The share price moved from here and it went all the way down here. So I am on the hook for the difference between this price and this price. So here's the original contract. I have a $2 point spread, which means I'm on the hook for the width, $200 times the 2 contracts. Next is, let me explain what happened here. The 114 becomes, I promised, because I shorted it, I promised to deliver Xilinx at $114 to someone else. Now, I didn't have the shares because I'm using options. I didn't have the shares, but I promised to deliver to somebody else. My insurance says I need to buy it at 116. And that's exactly what happened here. When the price goes to 130, 140, you see, I had to buy it at 116, and then I deliver it to somebody else at 114. And so when you do the math, I spent $32,000 buying the shares, and then this is how much I got paid when I delivered to somebody at a lower price. So it's a max loss, at least it's defined. There are times where these things don't go in your way. Only one piece gets executed, and the other piece don't. And sometimes it's really messy. Your broker will call you up on Monday. You got to fix it. You got to sell it at the open market. And if the price moves in your direction, it's fine. You lose less. But if the price moves down, you're in trouble. But in this case, it didn't matter because Xilinx is trading at over and nowhere near this price. You see, Xilinx is at 134. So max loss was going to happen regardless. So what do you do? Yes, I sat there and I said I lost my money and there's nothing else I can do. But there was something I could have done. If I did nothing, I suffer max loss. There was something I could do. I can close this piece out, or what some people say is you either close it, but really what you're doing is you're closing it out, and then I'm going to move this all the way over here, so B and C share the same point, and move A over here. And what that is called is the iron, right, short iron butterfly. And that's what I end up doing. I converted it because knowing that the share price is hovering somewhere around here, I converted it into an iron fly because you collect a much higher premium when these two share the same point. That's really the difference between an iron condor and an iron butterfly. You see, this is really a wide, like the head is really wide. The head is a single dollar, right, or a single point. And then the wings, right, that's what they, for an iron butterfly, these are the wings. An iron condor is the same thing. This is the wing, or the width of it. So the only difference is the difference between these two are really wide, gives you a better chance of making money, but a lower percentage. It's a high percentage, low risk, but you make less money. This is a lot harder to make money, but a higher, so lower percentage, but higher reward. But I converted to this to reduce my max loss because I received some premium. And here you see it. Don't worry about this. This is not the same transaction because I have two contracts. This is a cover call that also went bad. But here's the one that you want to look at. So you can see what happened. My put was a 90.92 for the Iron Condor. And then I slid or rolled it all the way so that they share the same point. The 114 is the common and 112. So right, this is the 112, 114 over here, and then this is the 116. So I moved it up. The next thing you notice is moving it up was pretty cheap. You see this? It cost me $3 to close the $92 and the 90, right? $3. And look how much I received in addition. So I copied this out, pasted it into a spreadsheet, and if you look at this, it net me an extra $125. So max loss 400. Well, technically it's 200 because I had two contracts, right? So you do this, which is easy. Okay. Then I collected the difference, and then you can see I collected another 125. So that's right here, 125. And so what that means is my max loss now is 275. So that's what I end up doing. So now that you see what I did, I hope that you can apply this if you're ever in a bad situation. Sometimes it doesn't make sense to convert into an iron butterfly. Sometimes it's cheaper for you to close it, but you got to understand what your max loss is. and then see how much it costs to close your the leg that's losing, right, or both legs. In cases where there's not much you can do, max loss is there. You convert the iron butterfly. You convert your iron condor into an iron butterfly. I receive more credit to reduce the pain. In the end, this is what that was. The Xilinx here is here. Again, there's some other bad trades that I have, and a lot of it has to do with moves. Think about this. Iron condors are a neutral strategy that says I make money over time. Sometimes it's only $1, not even $1 a day, right? It's 20 cents a day or whatever it is. As time decays, I make money, and then I normally close my position. When markets are volatile, either positive or negative, iron condors are really not a good strategy. They make money when markets trade in a range and they go up and down, or 2 days up, 2 days down. But this week was really bad. Again, it was 5 days up or whatever it was, or 4.5, and then Friday ended pretty close to flat. But again, it was a very strong week. Markets move anywhere from 6 to 9%. So it's a bad week. And so a lot of my iron condors were going to be in the money. I had Square, I had Apple, I had Microsoft. I had a lot of things that moved sharply against me, including Visa. Visa touched down to like $176, and then it shot all the way up to $200, and I think it closed the week. Let's see where it closed the week at. So Visa ended up at here, 198, and you look at the chart. This 5-day chart is obviously good if you're long. You see that? Not so good if you're playing condors. And so here you go. You see that move? This is a sharp move against me. And let's take a quick look, and I'll show you what I mean. This is my transaction log in my ETrade account. And here you go. You see this? The Visa. I had an iron condor at a 200. Now, because I had a lot of time left, you see, it's dangerous. Because if this thing keeps on moving up, right, my max loss is $1,000 times 2. That's a $2,000 risk. So I took a loss. This is a huge loss. You can see that, nearly $620. But I rather do that. Part of my portfolio management is to take the losses, right, and manage the risk, because I don't want to experience too many max losses in the year. Because if you do, that will be dangerous. Or you don't want to get assigned, because look what happened here. When you get assigned or you get put, right, somebody's gonna ask you to fork over the money, and when you don't have the money, you're in trouble. And I don't have the money. As you can see, these things, I don't have the money. I use the insurance leg to pay for it, so your risk is defined. But I want to warn you guys, the insurance leg doesn't always happen, because sometimes the strike price is in between your two options, and then you're on the hook, and so you have to be super cautious there. And then your broker will be totally upset at you. He'll call you up. You can't do cover calls. You can't do anything. You got to liquidate, or you got to have cash in your portfolio to pay for the money you owe. So be really cautious with these things. That's why I'm creating a video. Please like and subscribe. I know this is going to help some of you. Others, you may not even understand this until one day when you get yourself into a bad position, and you got to learn how to manage the risk. You got to learn how to close things. You got to learn how to roll things. You got to learn how to deal with bad things when they happen to your portfolio. So again, I'm not saying I had a good week. I really didn't. For my month, I'm back down to $40 profit. But by tracking my strategies, I can see what works and what don't. And over a long period, I know I will make money on my iron condors. I have. And it's so easy because I can just see it here. You see that? I made money close to what I make in my cover call strategy. So it's not too hard to figure out when it goes right, when it goes wrong. The key is learning how to track your data so you can fix or trade, learn how to repair a bad trade. So thank you guys for listening and watching. I know that this will help some of you, and I really appreciate it. If you guys can go to one of those affiliate links, buy something from Amazon, I will get paid a commission when you do. But again, none of these videos cost you any money. I don't ask people to join a paid membership group or Discord group. So please support me by liking, subscribing, or using one of those affiliate links and support me. Thank you so much. Let's do this together. Let's do this $1 at a time, and I'm here to help you win with money. This is Howie, wishing you a good week and a profitable trading week next week. Bye-bye.